Hey everyone, today I've got something pretty wild to talk about, something that just might change how we handle data, medicine, traffic, and even our everyday gadgets. We're diving into the world of quantum computing, and more specifically, we're going to chat about a company called ionQ that's got a lot of people buzzing. And trust me, it's worth listening to because this company could change the world. So let's jump in. Now, if you've never heard of quantum computing, don't sweat it. The big idea is this: traditional computers handle bits as one and zeros, while quantum computing deal with something called qubits, which can be either 1 or 0, or some combination of both at once. That simple sounding concept opens the door to all sorts of calculations regular machines can't handle right now. If that makes your head spin a bit, you're not alone. Honestly, it took me a while to wrap my mind around it too. But here's the bottom line: quantum computing isn't just some fancy sci fi dream. People on Wall Street and beyond see it as a massive game changing technology, almost like how VHS ended up dominating Betamax decades ago. Once you find that must have application, the crowd jumps in. For quantum computing, the big question is, when does it get its own killer app? Once that arrives, we might see adoption explode into areas like cybersecurity, finance, health research, and so on. Now, IonQ has put itself right at the center of this quantum storm. Their main claim to the fame is their trapped ion approach. Traditionally, quantum systems often use superconducting qubits, but IonQ traps ions, which are charged atoms, and uses lasers to mess with their quantum states. Why is that cool? Well, each ion is basically identical by nature, so they don't run into certain manufacturing hurdles other systems do. Like when you're fabricating qubits on a chip and the slightest error in production can throw everything off. But the ion Q's approach, every ion is the same. So in theory, their qubits behave consistently. The other angle they like to talk about is how it might take fewer qubits overall for ion Q to correct errors. Quantum computers have this tricky thing called decoherence. It's where all those delicate quantum properties basically get lost if you so much sneeze near the hardware. Once decoherence sets in, you lose the advantage of quantum computing. To combat that, companies do a ton of error correction, meaning they bundle multiple physical qubits into a single logical qubit that's error resistant. With superconducting qubits, you might need 1,000 physical qubits to make one stable logical qubit. IonQ claims they need way fewer, something like 16 physical qubits per logical qubit. That's a massive difference if it pans out in a real world application. So, what does IonQ actually do with all this technology? They've been focusing in on quantum computing as a service. If you're building an app that needs some quantum muscle, you don't want to buy your own quantum computer, which, by the way, can run up to thousands of dollars per hour in usage costs. Instead, you tap into IonQ systems through major cloud platforms such as Amazon Web Services, Microsoft Azure, or Google Cloud. That means IonQ is basically renting out quantum time to whoever wants it. Companies, researchers, government agencies, you name it. They're all going to want this because they partnered with these massive cloud providers. They're pretty much the only quantum hardware folk that are easily accessible on the biggest cloud services, which is a big deal if you ask me. Now let's talk money. In the early phases of quantum computing, revenue is small compared to, say, the billions that companies like Apple or IBM rake in. But IonQ has shown some year-over-year growth that stands out among quantum peers. And get this, they also happen to have a decent amount of cash on their balance sheet, hundreds of millions of dollars. Last I checked, that's helpful because these folk are still in R&D mode, and you need a comfortable pile of funds to keep pushing the limits of such a cutting-edge technology. It means that IonQ isn't desperately raising money every few months. They're not diluting their shareholders left and right. One thing that I really find interesting is IonQ's institutional backing. When big players in finance or tech start investing in a company early, that can suggest a certain level of confidence or, at the very least, serious curiosity. IonQ has snagged partnerships with big names like Amazon, Microsoft, and Google. Each of these companies have its own quantum ambitions, but IonQ's hardware is being offered right there on their cloud platforms. On top of that, they've also teamed up with the folks like Hyundai, for self-driving cars, AstraZeneca for drug discovery. That's pretty diverse lineup, which suggests IonQ is trying to show the world just how many ways quantum computing can be applied. Speaking of applications, let's get more into real-world examples. One big area is encryption. Right now, our online banking, emails, and messaging rely on cryptographic methods that might become vulnerable once quantum computers scale up. And another area is optimization, stuff like supply chains, traffic control, or complex financial modeling. Traditional computers handle these tasks in a linear fashion, which can become, well, painfully slow when you're dealing with thousands of variables. Quantum computers, though, they can tackle these mind-bending computations more efficiently. Then there's the healthcare. Imagine simulating entire molecular structures to find better drugs or pinpoint on new treatments that might interact with the human body. Add to that climate research, advanced material, battery design, the list goes on. Of course, the big question is when these potential use cases will start paying off in a big way. It's not enough for quantum to just to be cool. We saw quantum stocks go nuts over the last 6 months, but that can be partly fueled by hype. Investors want to see real sustainable revenue. ionQ has been reporting some steady momentum, but it's still in the early territory. They project faster growth than most in the quantum space, over 100% a year by some counts. And they've hinted that they might become profitable somewhere towards the end of this decade. Now, a lot can happen between now and then, especially in a young market that's still figuring itself out. But if you're willing to hold on for the ride, ionQ's path could be intriguing, to say the least. At this point, you might be wondering, what about the competition? Companies like IBM, Google, they're all pursuing superconducting approaches, which is different from ionQ's trapped ion technology. Meanwhile, D-Wave uses something called quantum annealing, which is more specialized for optimization problems rather than a broad range of tasks. ionQ is betting that their gate-based trapped ion system can handle a wide variety of computations. But it's not like the other guys are standing still. IBM, for instance, has been making strides with its quantum roadmap, aiming for bigger and better machines. That said, ionQ's selling point is that they have a method that's less prone to manufacturing variations and theoretically easier to scale while keeping error rates in check. Now, on the topic of error rates, ionQ's been boasting about algorithmic qubit, a metric they came up with to measure a system's overall performance in solving actual problems, rather than just counting qubits in a vacuum. The quantum world sometimes gets too fixated on the raw qubits numbers. The real question is whether these qubits are reliable enough to perform the kind of calculations you need. ionQ claims that their numbers show better gate fidelity, meaning fewer errors when they're running algorithms. If that measure gains industry acceptance, ionQ could stand out even more. But we'll have to see if others adopt the same way of thinking. Another piece of ionQ's strategy is modular design. They talk about building quantum computers that can scale from just a few qubits all the way to hundreds by stringing modules together. That might sound straightforward, but connecting multiple quantum modules is no walk in the park. You have to maintain entanglement between them, which can be super fragile. They recently acquired a company focusing in on quantum networking and teamed up with some laser manufacturers to keep pushing forward. If ionQ can actually stitch these modules together, you'd have a flexible system that can expand as needed, kind of like hooking up extra servers in a data center. That's a big if, though. We'll have to wait and see how well they handle the nuts and bolts of that approach. From a purely financial angle, ionQ is still unproven, which is the nature of any early stage tech. They're relying on external capital to keep going. They pay a lot of their team in stock, and they can meet that, and that can mean dilution down the road if they're not careful. But if you're the kind of investor who's comfortable with a high risk in exchange for the chance of a high reward, ionQ might catch your eye. The potential target valuations are huge. Some folks see this becoming a multi-billion or 10 billion company if quantum truly takes off. But that's the bet, right? You're trusting that quantum's time is near and ionQ's approach will stand above the rest. If the technology hits roadblocks or if the competitor leaps ahead, they could put a serious dent in ionQ stock. The overall market sentiment has definitely been bullish on quantum right now, with ionQ leading the pack. Some metrics suggest institutional money is coming in, and that can be a sign of momentum. Still, quantum computing is a roller coaster. There might be a hype phase where everyone's going crazy about it, followed by stretches when everyone forgets about it, progress feels slow, and the stock slides back down. The real question is whether ionQ can keep delivering steady improvements, forging big-name partnerships, and convincing more enterprises to pay for quantum time. So am I personally in favor of ionQ? Let's just say I see more upside than downside in the long run. Their unique tech, plus their partnerships and cash cushion, look like a good combination. But you gotta remember, nothing in quantum is guaranteed. It could be a while before ionQ or anyone else sees any mainstream adoption. If you're comfortable holding on through the volatility, ionQ might be worth a look. If you're more risk averse, you might decide to wait until the tech is, more mature. I'm leaning positive towards this company though because of their solid momentum, strong partnerships, like I said, and their distinctive trapped ion design. But I can't ignore the quantum is still finding its footing. So there's a healthy chunk of risk based in. If you do jump in, make sure you're doing your own research. Nobody likes throwing money into something they don't understand. So there you have it. Quantum computing might very well be the next big thing. And ionQ is one of the main players leading the charge. Whether or not it becomes a universal force in tech in the next couple of years or the next decade, that's still an open question. But if you're keeping tabs on potential breakthroughs, ionQ's story is worth following closely. Thanks for hanging out with me today, guys. If you found this video helpful, give this video a like,